So we've got geopolitical crisis, we've got energy crisis, we've got economy crisis, we've got inflation crisis, currency crisis, debt crisis. We've got the stock market crisis, real estate crisis. And then even beyond that, we've got global food crisis, health crisis, addiction crisis. Which do you think is the grandfather of all of them? That is the one people need to be looking at and realizing is going to have the biggest seismic shifts and then impact all the others along the way. All right, so we've got Jaspreet Singh here with me. Hey, Jaspreet, how are you?
Good. How are you? Thank you for having me.
Yeah, it's fantastic having you here. And I'm super interested in the fact that your YouTube channel, right? You got like 1.4 million subscribers, that people watching you every single day because you're posting every day. And your whole brand around minority mindset. I'd love for you to share, what do you mean by that? And in these crazy times, how does someone take actions with a minority mindset today?
I love that. So the minority mindset has nothing to do with the way you look, your ethnicity, or your skin color. It's the mindset of thinking differently than the majority of people. Now, what does that have to do with anything going on right now? Well, we have an economic slowdown happening. We are arguably in a recession right now, although nobody has actually admitted that. But we have an economic slowdown, we have asset prices falling, and most people, when they hear the word recession, they get scared, they freak out, they panic, when in reality, recessions, asset crashes, all of these things create more opportunity than ever. In fact, more millionaires are created during recessions than any other time. Why? Because you have people that think differently than the majority of people, and they use recessions and market crashes like Black Friday, but instead of buying the sweater at Macy's, you're buying a piece of the company. And so these types of economic events, these types of market slowdowns have happened in our history. I mean, if you look at the last century, we have seen a recession around every 10 years or so. And so even if you just look at our time frame from 2008 to 2020, that was the longest period of economic growth after the 2008 crash ever. And I'm not saying in the last 20 years, I mean, ever. That was the longest period of growth. And so we are due for an economic slowdown. And then add to that the fact that we had all the money printing in 2020 and 2021, even into 2022, we had all the stimulus, we had all the interest rate cutting, which blew up some of our asset bubbles. And now that we're trying to fight the inflation, we're trying to prick the bubble that we created. It is going to create more opportunities, but it requires you to think a little bit different than the majority of people.
Right. Okay. So let's dive into this, right? Because I love the fact that you cover so many different areas of the economy and of what to do about it on your channel. So let's just talk about crisis and the whole idea of crisis being, both, like danger and opportunity. And if I was to list out a number of crises right now, I'd love for you to pick out of this which you think is the biggest one, and maybe even where there's like biggest danger, also biggest opportunity. So we've got geopolitical crisis, we've got energy crisis, we've got economy crisis, we've got inflation crisis, currency crisis, debt crisis. We've got the stock market crisis, real estate crisis. And then even beyond that, we've got global food crisis, health crisis, addiction crisis. Like if you took all of those different crises that are happening at the moment, like which do you think is the grandfather of all of them? That is the one people need to be looking at and realizing is going to have the biggest seismic shifts and then impact all the others along the way.
Well, they're all very concerning. And now when you say, what is the grandfather? Well, ultimately, all the issues come down to money. What is money? The currency, and then the devaluation of the currency.
Right.
So what does that mean? Well, wars have been fought on money. And our money in the United States, the dollar, is a fiat currency, meaning it's a piece of paper that's backed by the United States government that says that this paper has value. It costs 12 cents to print a $100 bill. And so this is good and bad, depending on who you are and where in the economic cycle you are. It's good in that when the United States is facing or has faced an economic slowdown, that our government can work with the Federal Reserve Bank to print more of this money, this currency, to stimulate the economy. That's what we saw happen in 2020. We saw it happen in 2008. We saw it happen in 2000 when the dot-com bubble bursted. We were able to stimulate and inflate the economy. Now, the thing is, there is a consequence and a cost to printing free money. What I like to say is the most expensive kind of money is free money. What is that cost? Well, it's inflation. And in the past number of decades, you had a lot of people saying that printing money or stimulus wouldn't cause inflation because it hasn't. But that's kind of like saying that heroin isn't bad for you because I've been doing low doses of heroin and it hasn't killed me. Well, just because you've done some heroin now and you haven't gone to the ER doesn't mean that if you keep increasing the dose that you won't. And so we've become addicted to this money printing, like the drug, and now we're paying the price for that. We printed so much money over the last, not just 2 years, but over the last number of decades. And now we're paying the price through inflation. And how do you fix this inflation? Well, you got to do the opposite of what created the inflation. You have to fight the inflation. And this is a painful thing to do. This is where now the Federal Reserve Bank has to either fight inflation and induce a recession, or stimulate and fight the recession, but then make inflation worse. Like it's facing this fork in the road, and neither of them are good things, but a inflation problem, like a currency crisis, like hyperinflation, is a much bigger problem. Now, we have the benefit here in the United States where the dollar is the world's reserve currency. So hyperinflation is a much less likely scenario. However, an inflation problem could mean that now other countries who are holding on to dollars, because you have big countries around the world that use dollars as a safe haven, would say, oh no, the dollar isn't as safe of a haven as we thought. And then they start dumping the dollar, which could hurt the value of our bonds, create an even bigger bond crisis, and create even more problems for the United States. And so why does this now trickle down to all the other problems? Well, all these inflationary issues also helped spur business booms, because now it was very cheap and easy to access money. If you were a startup, you could access a lot of dollars because startups were able to borrow money essentially for free, or institutions were able to borrow money for free. Banks were able to borrow money for free, and they wanted to put this money somewhere. Where did they put it? Into startups. And you also had some institutions put this money into real estate. So, there's been a big debate over the last 12 to 18 months over what's causing inflation. Yet some people saying that it's the supply chain issues that have caused inflation. And what I've been saying on my YouTube channel, Minority Mindset, is, well, the supply chain issues are actually a byproduct of the inflation. Because now, when you have all this money printing that happened, nobody was working in 2020, but you print all this money and give it to people. So now what happens? You got a couple $1,000s in your pocket. No one's making shirts. No one's making clothes. You go to the store and you buy all the clothes because you have money in your pocket. Well, now the store is going to not have anything to sell. So they're going to be forced to raise the price of the products and then call their manufacturer and say, hey, we need more shirts. We need more clothes. People are buying our stuff. Well, if the manufacturing plants are shut down because of the pandemic, now you have all these orders from stores who have nothing to sell. Now the manufacturing plants get backed up, and now they're going to have to start finding more employees. And now they start having to pay their employees more. And then they have to start producing the products and start shipping them quicker, which creates shipping backlogs. So all the supply chain issues that we're facing are a byproduct of the inflation. What caused the inflation? Well, the money printing and the stimulus. And so then you start getting to the geopolitical issues, which, many of them do stem to money. You have the European energy crisis. Well, a big part of that has to do with Russia turning off energy to the European countries. Why? Well, I can't say why. I don't know exactly why, but we could say it's a form of potentially economic warfare. To hold them hostage, potentially, right? I mean, there's a bunch of theories out there. Russia has claimed that they turned off the Nord Stream because of a potential leak. But I think a lot of European people are saying this is a way of economic warfare to potentially weaken countries. Why? Russia wants to assert their dominance.
Yeah, I want to come back to Russia because I'm in Singapore right now. I'm going to be heading back to Poland, which is where I was during the pandemic, and where my partner is. And I can tell you, like, what's going on in Europe is pretty crazy. I want to come back to Europe and
Yeah.
Russia, and the fact that there is no question that we're going to be looking for outside forces and how they might be affecting us. Before we get onto that, I'm super interested in your thought around the inside forces, like self-inflicted, where we're our worst enemy. Because let's take the US government, right? And what the US government's right now, or even like the UK government, what happened quite recently as well. You had a video, which you did this week, actually, ultimate advice for young people who want to get rich, where you talk about intention, right? And how we all have to be clear of other people's intention. You know, if someone's selling to you, that they're not trying to rip you off, they're trying to like make a sale, right? So you're going to be aware of that intention, even if it's like an asset or a product of some sort that you can buy, like a house. However, in the case of governments, we're seeing not only must they have some intention where they might want to do something good, but there's also unintended consequences, right? Where they're like, well, I didn't know it was going to happen. Or actually almost intended consequences, but where it's unavoidable. It's like, you know what, I'm not going to be in power as a president in 8 years' time. So yeah, maybe I print money now and maybe it doesn't matter later. Or, okay, I'm in the Fed now and I'll print money, but maybe later there's a different way forward. In your view, even without outside forces, you can look at people like Peter Schiff was talking about this. He was on your channel. You have people like Ray Dalio saying, just because of what US itself is doing with its own currency, it's self-inflicted to the extent that even if no one did anything, it's still going to implode if it keeps on printing money. Do you think, from your point of view, that the conspiracy theorists are more correct when they say, hey, you know, there's almost a death wish, this is going to happen, and they'll end up paying, printing so much money that in fact their debt will go down? Or do you think that they really don't know what they're doing? What's your view from your side, given that you've looked at this so closely?
Well, sometimes you can be right, and other times you can be early. And this is where just understanding the basics of history and economics. I mean, no civilization, no empire has lasted forever. And a common occurrence amongst a civilization collapsing has very commonly been the debasing of the currency. So if you go back to the Roman Empire, the ancient Roman Empire, they were a very powerful force. What caused them to collapse? Well, there was a number of reasons, but one of the reasons was the government wanted to really invest into their infrastructure and grow very quickly. So they started debasing their currency. Back then, their currency used to be silver coins. And then they started mixing their silver with cheaper metals. At first, it created a big boom in their economy because now people were able to do more stuff. But then people started to realize that this new debased silver with cheaper metals isn't as valuable as the pure silver. So people wanted more money and people wanted more money. And so inflation eventually caught up. And it was one of the reasons that led to the collapse of the Roman Empire. Ray Dalio talks about in our more recent history how we saw the Dutch Empire rise and fall, which led to the British Empire rise and fall. The Dutch Empire was on the guilder, the British Empire was the pound, and after the British Empire fell, that's when the dollar and the United States Empire rose. And the factors that have led to the civilizations falling was printing money, aka inflation, and then having more civil unrest within that empire.
Right.
And this creates a weakening of that empire. And then that creates opportunity for an external force to then attack and take over. And so, can the United States last forever? No. Can it be the top country in the world forever? No. Is it going to happen next week? Probably not. And so it's understanding that, the dollar will eventually lose a lot of value. But when is it going to happen? Is it going to happen next month or next week? Probably not. Is it going to happen in our lifetimes? Maybe. And there's a number of factors that are going to come together to cause that. And in historical terms, it happens. It's like 2020 is hindsight, right? It's easy to see it when you look back at it, but when you're seeing it happen, it's very slow motion. And so this is where now it is your duty as a person who wants to take care of themselves and their families and their communities to be aware of what's happening. That way you can take better care of yourself and your family and your community. That means using your money as a tool, not saving all of your money, owning assets, owning things that have real value. Because if you were to have all of your money in cash and cash is losing value to inflation, then what? And this is where it's just being a little bit more financially educated and understanding how much cash to hold. When do you hold cash? Where do you keep the cash? Can you convert this cash into an asset that produces value? And it's thinking a little bit different as opposed to just thinking that everything is always going to be okay, but knowing that I'm going to protect myself against the worst, but hope for the best.
Yeah, absolutely. Let's go a little deeper into this. We picked the granddaddy of all the crises, which is the actual, fiat currency crisis itself. We know at some point it's going to happen, right? And most of us, we don't have a long enough memory to, even though I was born, I was telling my age now, I was born at the time when the pound just collapsed effectively and the US dollar took over. It's been 50 years since the US dollar went off the gold standard. And during that time, the oil crisis happened, just like we have an oil crisis today. And then when the oil crisis happened, we then saw the US dollar take over after America went to basically OPEC countries and said, hey, like, we'll give you all our protection, provided that you use petrodollars. Now we're seeing a whole different shift taking place. So what I'd love to do is just share my view of where things are at and get you to add to that view what you see happening as well. And then get from that to say, all right, if this whole idea that this is not just something that's going to happen maybe 10, 20, 30 years in the future, but something that could be inevitable, what are the consequences of that, right? So what we can see at the moment for sure is that the BRICS countries have all come together, and most people aren't that aware that BRICS, which is obviously Brazil, Russia itself, and then you've got India, China, and Saudi Arabia, none of the BRICS countries have basically denounced Russia, like for what they've done with Ukraine. I mean, all of them have all, in fact, got together and they have accelerated their conversation around having a reserve currency. They're actually, meeting right now about that. You've got the OPEC countries, including Saudi, now coming into BRICS as well. And like we can see, Saudi is picking a fight with America quite openly at the moment. So we are already seeing things that the likes of Robert Kiyosaki, Ray Dalio saying, oh, these things will happen in the future, actually happening now, that it will be almost like, an economic war and a hot war at the same time, which will then make this shift happen. We're not, and Ray Dalio, even before all this happened, we're saying it probably is by 2025 that we're going to see this shift happen, which is only a couple of years away. So given that this thing could be, like, we're seeing it actually playing out like in very blatant forms right now, exactly as you said, with Nord Stream and all of the other things that are happening. We're in for a horrible winter right now because of what's going to happen with energy. And if it isn't this winter, it may be next winter or the winter after, where the West has to capitulate. And we've already seen UK have to shift around and pivot as well. So all of this is happening right now in real time. It's like a slow motion car crash. I'd love you to add whatever you're seeing in addition to that. And then also what the consequences are. Like, what does this mean for the likes of cryptocurrencies? What does this mean for the likes of property prices? Like, what does it mean for the likes of people and their jobs, based on you kind of projecting out the moment when we actually see this massive devaluation happen?
Absolutely. And I think you hit it right on the head with all the issues going on. And to add to what you said, you talk about the petrodollar. What that means is that oil is valued based on the dollar. Well, China has made a move to get oil valued not by the dollar, but by the yen, by their currency. And so all these things have a very negative consequence to the dollar, as you said, the BRICS nations coming together to try to create their own reserve currency. All these things are in a move to devalue the dollar. If the dollar continues to get devalued, if people see the dollar not as the world's reserve currency, we don't have the ability to produce that much inflation anymore. The value of the dollar goes down. That really hurts bond prices. And you said, what does that mean for real estate? Well, there's two different kind of factors that you have to understand. One is the economic factor, one is the currency factor. The economic factor says home prices have gone up so much, and now interest rates have gone up significantly. I mean, mortgage rates are around 7% now, and at the beginning of 2022, they were sub 3%. So mortgage rates have gone up so much, and this is going to push home prices down relative to the dollar. Well, if the dollar starts to get devalued, then that would, in theory, push home prices up relative to the dollar. But home values have fallen. It's just that the currency that you're using to buy that property, you need more of that currency in order to buy that asset. And this is where, like you said, cryptocurrency has the potential to really grow in value. And that becomes a much more speculative play. Like I invest in cryptocurrency, I believe in cryptocurrency, but for me, I know it is a risky asset. I also invest in physical gold. That is and has been your traditional inflationary hedge. Which one will be better? I don't know. I do think crypto has a lot of value. I really think that there's a lot of use case for crypto. I think there's a ton of use case for crypto, Bitcoin, the blockchain, because it is a very easy way to move money. It's a very simple way to transfer money. I use cryptocurrency and have used cryptocurrency to pay people overseas. And so the value that that has is immense. So I don't see cryptocurrency going to zero, but again, it is riskier. But this is where people will probably want to move to an asset that has a more defined value for money. That's why the currency that the BRICS nations are trying to build supposedly will be backed by metals. One of the reasons why Russia has been working to acquire gold, even China. And so, again, these are all conspiracy theories right now, but you pay attention to what's going on, and this is where you want to become more financially educated, because if the conspiracy theory turns out to be partially true, well, you don't want to be the one that's then scrambling to figure things out to take care of yourself, but rather if you are more prepared, worst case scenario, oh no, you have more assets. Oh no, you worked hard to put some extra cash aside, and you're just in a better situation financially in the worst case scenario for you.
Right. Yeah. One of the main mantras that we're giving to our investor community at the moment is cash is trash, cash flow is king, right? It's kind of like at the moment when we look at all the different things that can generate cash flow, and obviously even crypto is going that way with the proof of stake that you can now actually earn off your crypto. Businesses, if you have cash flow driven businesses, what's super interesting is seeing the number of YouTubers that are getting into cash flow driven businesses off their brands, like Mr. Beast and Beast Burgers. Like if you actually have smart ways to be able to build cash flow, even acquiring companies that have cash flow, then that can be a good way to weather things. How has your investment thesis for your own investments shifted in the last couple of years, especially the last 12 months? And are you moving more into cash flow assets, or are you doing things a different way?
Sure. So I invest my money in 5 places: my own business and startups, real estate, stocks, crypto, and physical gold. I've been putting a lot more money into my own business, which up until now has been called Market Briefs. We're switching that over to just briefs.co. Briefs/Market Briefs is a newsletter company. So we have a free financial newsletter, and we're just launching our business newsletter for entrepreneurs and business owners and founders. And it's a free newsletter to keep people aware of what's happening for investors or for entrepreneurs. That way you can make better decisions with your money. So I have been allocating more money towards my own business, like what you say, a cash flow producing asset. However, I also see things changing. And what I mean by that is our newsletter company is an advertiser paid business, meaning that we don't charge our readers anything. We have advertisements. We charge sponsors a fee to have a placement within our newsletter. Now, my theory is come 2023, investment or advertising dollars will get hurt, if not go away. And why do I think that? Because when the 2008 crash happened, we saw businesses that were reliant solely on advertising get burned, just get completely wiped out. So for me, it's let me build up some cash reserves to take care of us if and when that slowdown happens, but then have the ability to invest heavily into advertising to grow the business then. Like I met with my tax advisor just recently. We were talking about, this is your tax bill. Why don't you do a big end of the year advertising campaign? And after talking to him, I was like, I don't think that businesses are going to be able to spend as much money in marketing next year. So I think advertising costs will fall in 2023. So I'd rather pay the tax bill this year, have that cash on hand as a cushion, but then also use that cash to take advantage of cheaper advertising costs come 2023. Mm-hmm. So kind of a little bit of a confusing answer, but my thesis is I think we can grow the business quicker if we see an economic downturn, if we are prepared.
And that's interesting because your business obviously is education, right? Like you're teaching people things, and more importantly, self-education. People are there actually investing in themselves as well. I'd love for you to share your thoughts around education itself, plus other industries that you see really benefiting from the cycle as it is right now, because there are clearly industries like that. I think education is one of them. When people are in the downturn, they're like, hey, I got to re-educate myself because like my education at school wasn't strong enough. And actually on that, I think that your story is super interesting because like, you know, your parents wanted you to be a doctor. My parents wanted to be an architect, with the whole traditional education system, and then actually ended up getting out of it, but still being an educator, but in a very different way. How you see things growing in the education field and what you're doing related compared to like the centralized education system out there.
Yeah, education is definitely a huge field. I kind of stumbled upon this industry by accident. I was supposed to be a doctor, like you said, but I was like a rebel in the sense that I would like try to be an entrepreneur on the side and try to invest my money. And my parents were always like, don't do that, that's bad. So I was like running my businesses in secret when I was 17, 18, 19 years old. And yeah, it was a true story. And my parents actually didn't even know that I was running a business until I was, I think I was 21 or 22 when my business got featured on the news, the local news, and somebody saw me, called my parents and said, we saw your son on TV. They thought that I was going to jail. They were like, no, your son is running this business. So that's how secret I ran everything that I was doing. But I started teaching because I got screwed over a number of times. I got scammed. And that was for me, like, I want to make videos just to help people not get screwed over the way that I was. I didn't have any monetization plan. For me, it was just a hobby because I felt like I got screwed over and I was busy working on my other business at the time. Well, slowly the Minority Mindset brand started to grow and I really enjoyed it. I mean, I love talking about this stuff. That's why I can make videos as often as I do, because I really enjoy it. I mean, it's like almost 10 p.m. here in my office and we're still talking. I love doing this. So this is something I do for fun, but I was able to grow this and then turn my Minority Mindset brand to help grow some of my other financial businesses now. So I think education is going to be a growing industry, but it is very competitive because I mean, a lot of people are trying to do it. It's easy to start, but very difficult to scale. And I think that's where, you know, you have to be able to differentiate yourself and really provide value if you go down the education route. I think the digital media businesses are going to be a big piece of growth in the next decade because more and more people want to do business with a person rather than a corporation. And so with the growth of social media, people are going to want to see who's behind the businesses. Like bigger corporations are spending a tons of money to get influencers, not to sponsor them, but to have influencers be like a part of the organization. That way influencers can be a face of a brand. And so now if you're trying to build a business, every business is going to need some sort of media component. And that's where I think there's going to be a ton of growth, the media side, even if it's not education. So I think those two, the digital media and education, are going to be some of the biggest industries for growth in the next decade.
Yeah. And this is the most interesting thing. We are living in this world where there's so much fear because there are so many things that are happening at a macro level that are collapsing in ways we haven't seen for a long time. And then there's also brand new industries which are growing and decentralizing entire industries as well. So I'm interested in your thoughts on this because, you know, you're talking about education here, and you know, we were talking about this before we even started this interview about what we're doing at Genius Group and how so much of this is about how do we bring education to where people really are, right? And we're already they're doing it for free, but they may not be getting a high school diploma or a degree program. And there's no question the future is that people can choose their own education. They can get it personalized. But there's, like, in the way I see it, like 5 different industries that are going to go the same way as the likes of the media industry or the advertising industry or the payments industry in the last decade, where it went from centralized to very decentralized. But we've got 5 which are way bigger than that. I mean, obviously education is one of them because it's very government controlled in most countries. but you also have med tech as well as ed tech, which is the whole medical industry. You've got, and that's super overcharged in places like the US and other parts of the world. You've also got the whole green tech industry, which is why people like Elon Musk and Tesla are in that space. And that's the entire energy system, which we can see breaking down when governments can control it. And then you've also got the space tech industry, which is just getting started, but like used to be all controlled by governments and no longer is. But the one that I'm most interested to speak with you about, I mean, anything you have and your thoughts in whether you're investing in those areas, I'd love to hear. But the big one's fintech, right? Like it's the actual finance industry itself, because we can all see that so much of what's going on in the world today is created by the banks and by the central banks, and whether or not blockchain and the way that we're moving forward can actually decentralize such that what we're complaining about today may not even exist in the same form 20 or 30 years from now. What are your thoughts on that?
Yeah, 100%. So to add upon one point about your decentralizing education, that's one of the reasons why I love YouTube, because when the pandemic hit, you had people, I mean, this is a true story, people who were paying 40 to 60 grand a year for the college education that were watching it off of Zoom or a web meeting, and they were bored out of their minds from their teachers. So then they'd go onto YouTube and watch better lessons and learn more stuff for free. I think that's when people started to realize the value and power of decentralizing education. But on the topic of fintech, I'm a huge supporter of fintech. I'm a pretty big investor in fintech. And along with fintech, also legal tech. I'm also an investor there because, so I'm an attorney by trade. When my parents found out that I wasn't going to be a doctor, they were like, you have to at least become a lawyer. So I went to law school, but I never worked as an attorney. But what I learned, I mean, I love studying the business side of things. And as an attorney, there's a lot of fat in the legal industry. And so like, if you wanted to go in your business and get good corporate business advice or good business advice, you're going to be paying somewhere between $500 to $1,000 an hour for an attorney fee. And it's a lot of money for you as a small business owner. And for the attorney, well, you're not getting all $500 to $1,000 per hour, because now you have to pay the equity partner, you got to pay the person who brought you in, you got to pay all the different people involved. And so the attorney's making a small little piece of that, and you are paying a ton of money, and all these other people are getting fat and rich from this old, outdated system. And that's one of the reasons, like, I'm an investor in a company called Up Counsel that's working to kind of decentralize in a way law, where now you can work directly with the attorney through a freelancer model. And now you can pay a whole lot less, and the attorney's making more, because now they're working directly with you and you get the same quality, same type of legal care. So I like that. In fintech, you know, I love fintech because fintech allows people to understand, manage, and grow their money so much easier. Like, I mean, we could just talk in a little bit of an extreme. 100 years ago, if you wanted to invest your money in the stock market, if you weren't very wealthy, it was nearly impossible, because you had to know a wealth advisor or a broker, and then you'd have to trust their opinions about the stock and then put their money in. It was very difficult and very risky. Nowadays, there are so many apps out there that will let you start investing into the capital markets with as little as $1. And that just makes it so much more accessible. Now, the problem is a lot of these apps give you access without the education, which isn't their fault. They're giving you access, but many times tools without education can become it's a double-edged sword. One example of that is credit cards. Credit cards are a great tool. I only use a credit card because I get a ton of perks and cash back. But if you don't have the education of how to use a tool, that credit card will skin you alive financially. And this is where now, okay, you have some great tools, like Robinhood has made stock market investing a lot more accessible. But if you don't know how to invest your money and you just start throwing your money into a whole bunch of meme stocks, trying to ride the wave, hoping you're going to get rich on margin, and then you lose all your money and more, well, now that tool has just skinned you alive. And so this is where now the education becomes incredibly important. And the fintech industry isn't so worried about the education. They're worried about just giving you access, which is important. But that access without education is really, it doesn't serve the whole value. And that's where those two industries meet, is now where you can really see an impact and value. I invest in fintech, but I'm working on more on the education side.
Yeah. That financial education, I'd love for you to share with everyone watching, because everyone's at this point, whether or not there's somebody who has no money at all, even someone who's sitting on millions going, I don't want to lose my millions. This psychology, mindset of financial education, like the gambler mindset, on the one hand, it could be someone who goes, okay, I'm in so deep, I might as well just like double or nothing, right? Which is what we're seeing with many people who've lost all this money in crypto recently and have never experienced that kind of loss before. And so they're now just frozen, and they know they need to do something, they don't know what, right? And then secondly, the opposite, like I just got a bunch of chips, right? I got nothing to lose, right? I'm just going to go to betting like crazy, which is what happens when you get student debt. And it's like, suddenly it's like, hey, I've got like all this cash, so I can actually go out there and actually do something with it, forgetting you have to actually pay it back later. In either case of having like too little or too much, you end up doing crazy stuff, right? What would you say to get people back to a rational mindset in crazy times are the top couple of things they should be doing right now?
The first thing is, especially when we talk about investing your money into these types of assets, if you're a beginner, do not use debt. Stay away from debt, because debt amplifies your mistakes. And debt is what turns a small little correction into a major crash. Because now, we'll give you an example of what's happening right now. If home prices correct by 10 to 15%, you might not think it's that big of a deal. But right now, the average down payment on a home in the United States is 6%. So what does that mean? If you get a home with 6% down and home prices fall by 15%, well, now that correction can turn into a crash, because now you have a whole section of the country that's underwater on their homes. And when you're underwater on your home and you struggle to make a payment, well, now you're much less incentivized to continue making the payments. Instead of sending in a check, you might just send in the keys, because you feel like, well, I'm underwater, what's the point? And that's what can create a influx of supply, because now more people start selling, or you see forced sales, because now lenders or banks, or, in the stock market, you have margin calls. All these things can then force more sales, causing an increase in supply, causing asset prices to go down more. So the first thing is to avoid the debt. And then second is, when you see that type of distress, that fear, that's when you want to be, the old saying is, be fearful when others are greedy, be greedy when others are fearful. When asset prices are falling, that's when you want to start thinking like the minority, not like the majority, and look for the good assets and start buying. And if you don't want to spend the time, effort, and research to actually research an asset, like if we're talking about the stock market, if you don't want to read the earnings calls, if you don't want to study the company, read the financials, then don't invest in the company, invest in something like an ETF or an index fund. That way you can limit your risk, because if you're just throwing your money into a company because you think it's a good investment, now you're gambling. Investing is different than gambling, although a lot of people want to argue that it's not. It really is different than gambling if you understand how it works. And if you are not willing to put in the work as an investor, that's fine. It's not for everybody. That limit your risk by using something like an ETF or an index fund, both low costs. That way you can buy these things at a discounted price without taking on all the risk of investing your money, throwing all of your money into one company.
Yeah, and talking about de-risking, obviously one of the biggest ways to de-risk is by who you know versus what you know, right? Getting in the right community, being around other people that are savvy and are able to share information as well. Obviously, you have market briefs or briefs, which we'll share with everyone so they can all see what you're doing and how you're doing it. We obviously have our Genius group, where we have groups in all different cities and countries. What would you say in terms of, number one, people investing in themselves, including in the communities they go to? Number two, any particular communities outside of yours and mine that you would recommend to people that you think are great, that they should be thinking about? And number three, without overloading you, international, to what extent should people be thinking beyond their borders?
So for number one, regarding investing in yourself, this is one of the most important things that you can do. And it becomes especially when you're starting off, it can become tricky, because you're saying, I don't want to spend maybe $20 on a book, or maybe I don't want to spend $1,000 or $5,000 on this coaching. But instead of focusing on the price, this is where you want to really focus in on the value. Because if someone said it's going to cost you $5,000 to learn this thing, but it's going to make you $50,000 worth of money, well, now it's like a no-brainer, right? Pay $5,000 to earn 50, but you don't know if it's going to earn you 50 or not. So this is where you want to make sure you're learning from good sources, but work your way up. Before you spend $5,000 on anything, start by watching YouTube videos for free, listen to podcasts, then advance by reading books. Then as you start reading books, start doing. Then maybe buy a class on something. And this can be from real estate investing to stock market investing to financial planning to whatever it might be. And then if you want to continue learning while doing, then you can invest even more into something like coaching and consulting, but you have to be willing to invest in yourself. The second thing, when it comes to looking for groups, I don't know of any major groups like that off the top of my head. Obviously, you have a great community that has a ton of resources for the people listening to this, watching this. So check that out, marketbriefs.com, briefs.co. But then beyond that, for me, what has worked for me is reading books, because, I didn't grow up with any sort of mentors like that. I didn't have real estate investors in my family or investors like that. I didn't know what dividends were. So for me, the way that I learned was by reading a lot of books, but more particularly biographies. Look at some of the people that have inspired you and look at their biographies, and you're going to learn so much. And it might not even be about things that you think you're going to learn about. Like when I read Ray Dalio's books, I learned a lot about mental health, because he had a son that was facing mental health issues, and he talked about that. And you learn so many different things from these biographies, and it makes you a much more well-rounded person. Like you talk about, decentralizing education. If you want to get an MBA level education on how to run a business, go out and read 20 of the top business books on Amazon that have the top ratings. And I promise you, you are going to get so much value out of those 20 books at a fraction of the price that the MBA will cost you, and then go out and do something based off of what you learn. And the third question of looking beyond your borders. Yeah. And, this is becoming more and more attractive and more interesting nowadays. And there's a number of ways that you can play this. The safest way for you to look outside of your borders would be to look at like something like an ETF that gives you exposure to emerging markets. Emerging markets are companies and countries that are outside of the United States, if you're in the USA, and now you get exposure to those. If you have more capital, well, then you could look at actually going into other countries. Like, I know we didn't go too deep into the UK, but the UK is facing a pretty severe property and housing crisis in the coming years, because unlike the United States, the United Kingdom doesn't really offer 30-year fixed rate mortgages. Many of them are variable interest rates, or they readjust after 2 years or 5 years, and some of them 10 years. And in 2022 to 2023 and 2024, you're going to see millions of households see their interest rates readjust at an interest rate many multiples higher than what they originally got. And couple that with the energy crisis, couple that with the inflation, couple that with the economic slowdown, and you have the workings of a pretty bad property crisis. But now, what does that mean? Well, if you're a real estate investor, that could create real estate opportunities for you. But if you want to be investing in an outside country, which I have never done, so I can't really say if it's good or not, but you would need more capital to do that to make it worthwhile, to go there, learn the laws, and start all over there, but then also protect your assets somewhere else. It gives you a little bit of a protection because it's operating on a different currency. But that's where also, like I have a friend of mine who is from the United States, but is developing property in Guatemala. Part of it is a way to protect currency and to get out of the United States, and because it's a place where a lot of people who are digital nomads are moving to, because the cost of living in the United States is so high. So people are moving to a cheaper cost of living. So that was his justification to start buying land and actually developing land there. I've just never done it before myself, but there is a good argument to be made that there is value in that.
That's brilliant. Yeah. Great advice. And I love the way you're thinking. If there was one thing in addition that you would add for everybody from the point of view of how to keep your radar on, right? I love the way that like every day you have up-to-date information, which clearly comes from watching a whole bunch of different sources. And most people, they still just watch the mainstream media, right? Which is the worst place to go for sources. So how do you go about making sure you're keeping informed on what really is going on there? And what would you recommend for everyone, whatever their specific focus is in the way that they're going to be building their wealth?
So for me, it's kind of funny. I started because when I started, the pandemic hit in 2020, and there was so much news happening. And that's when I switched to making daily YouTube videos because there was so much craziness happening. So I have a team here originally at the Minority Mindset, and I said, look, can you guys give me a daily breakdown of what's happening in all the different sectors of the economy? That way I can make better and more educated videos, because I'm already doing my research. But if I have multiple people out there trying to figure everything out and doing the research and analysis for me, that helps me out. And that was when I was like, this is a pretty good thing. How about we market this as a newsletter for free? And we did that just kind of as a test, and many people started signing up and enjoyed it. And that's when we branded it as Market Briefs, and that became Market Briefs. And then that grew to a pretty large newsletter relatively quickly. We haven't spent a penny in advertising yet. And now that has become briefs.co, which will also become include a business briefs newsletter. So that's how I started getting my information. But I watch a ton of YouTube. I watch YouTube videos that are not just in America. I actually watch videos, interviews, and people in different countries, sometimes in different languages, to see what's happening in different parts of the world. Like my family's from a state in India called Punjab, and so I watch some of the news over there, just to kind of get an idea of what people feel about the economy in different parts of the world. And I read a lot of newsletters, not news, but newsletters. I pay a lot of money for a lot of these subscriptions to just get an idea of what's happening. So it keeps me up to date.
That's super. I love that. And that kind of brings up a thought that I think is so important, which is when you have a responsibility to pass on some information to somebody, like the fact that, you got the brief. So it's like, right, well, then I need stuff for that. So, hey, let's build a focus, let's build a team, or even doing a YouTube video, or even us being here today. It's like, hey, what information do we want to pass on to others forces us to then have to be learners ourselves as well. And I definitely think that is a great thing for everyone to be taking away from this as well. Even if they don't have a YouTube channel, they can pass something on to their kids. They can pass something on to their husband or wife. They can pass on to a friend and say, hey, this is a piece of information they're going to find valuable. And what can I actually share with them tomorrow? Well, I better go out and find something today that I'm passionate about that can actually then be passed on too. So with that, I just want to say a huge thank you for actually not just being here, but just for everything you're doing, because you are actually influencing so many people out there. Really, really appreciate it. And I know everyone's got a lot from this interview as well. All the best, and look forward to having you back on our channel again.
Thank you so much. This was a great interview. Great questions. And I would love to help out in any way that I can. Keep up the great work.
Thanks very much. See you later.
Bye.